Good day, all. Ira Epstein of Linn Associates with your agriculture update for Monday, as we're here now on the 10th of June, 2019 at 4:15 p.m. Central Daylight Time. As you can see, the grains unchanged to a bit higher. Wheat up, soybeans up, cotton market up a fraction too. The report we got came out today at 3 o'clock, and the corn planted progress is 83% compared to last week 67 and a year ago 99. 59% of the corn's in good to excellent shape versus 60% last week. Spring wheat planted progress came in at 97% compared to last week's 93, and at this time of the year normally about 99. Cotton market came in at 75% compared to last week's 71 and 88% earlier than that. And cotton came in 44% good to excellent compared to last week's 46%. So as I'm looking at it, my own guess, and that's all it is that I think the reports will probably, I think that the reactions could have been neutral to bearish corn, neutral to bearish soybeans, wheat market probably stable, cotton probably stable. That's just a guess. Do we know? We'll find out on the opening tonight when the market's all open. But if you take a look at soybeans on the weekly chart, you can see that the market is staying underneath the 18-week moving average of closes, which I think keeps the market with a downside bias. And it also says that on rallies, the potential for 872, about 14 cents higher, is still the resistance point. Remember, we're going to get tomorrow the WASDE report, which is basically a supply-demand report. But the first one you get at this time of the year gets a lot of revisions as we go through the summer, so beware of that. In soybeans, you know that last week we had reached down to fill the gap here, and I'm wondering if tonight's report and the WASDE might be enough to go for this gap down there. I'm not saying it has to, but it's a question as to whether it'll happen. The market is sold off, as you can see, from 894.5 on the daily chart down to a low today of 848.5. So in round figures, about 46 cents, something like that. That's a pretty good sized break. 36 cents. No, 46, I'm right. Where the market went down to is the 18-day moving average of closes, and it sort of hung in there going into the close, closing above it about 5-6 cents. In the terms of the Bollinger Band, what I see is resistance with it at the 100-day average. Your neutral right here, if you got a big break in prices, 806.5 is a possibility. When I come to the momentum, it's pointing down. So we have a market that lost its upside momentum. It fell back to the 18-day average of closes. The chart pattern is one of a higher high, lower low. I'd call the market neutral right here. In the meal market, this is how the market was coming. Started its correction. This was Friday's action, the 100-day average. The market sliced through it and the 18-day and then turned back up against it. So again, the theory being that you get down to these numbers where the market likes to fight a battle. That's why I call it the line in the sand, and the market did its job of holding it. That's neither bullish nor bearish, because I've got still the ugly chart pattern and momentum pointing down, no real trend. In soybean oil, how many days are we going to hug this 18-day average of closes as the market tries to wait for, I think, tomorrow's report, and then you'll see the crush spreads go back on as people place their bets again after this report, and then they say, okay, I like being short beans, short meal, long oil, or the other way around. It's inevitably one of those type of trades. In the corn market, I still think the market can make a run down to 406 3/4, or wherever that 18-day average comes in tomorrow. It's jumping about 2 cents a day. So that would put the market in the neighborhood of 408 3/4. And if it hits that number, the market does what I said. It reaches the line in the sand, probably waiting to see what's going to happen on that WASDE report, and that report comes out tomorrow in the mornings. I think it's 11 or 12 o'clock. You might want to check with your broker. I think it's 11 o'clock Chicago time. But down, and you can see how the market's got the, as we'll call the swing line trend down, but the bias up because you're over that 18-day average. Wheat still in an uptrend, support right into the 18-day average. Market's still working off being overbought. Any reading over 70 in the slow stochastics is overbought. Sugar continues in the uptrend, higher lows, higher highs, gets over the Bollinger Band, pulls back to it, but still acting like a market that still has bullishness about it. And we could get embedded readings. Both numbers were over 80 today, both over 80 on Friday, and both over 80 on Thursday. Therefore, I said you have the embedded reading, which tells me until the prices, if they break, I would expect to see what? Buyers show up on the breaks until you lose the red line closing under 80. In the coffee market, today the market got a pattern of lower highs, lower lows. So the swing line turned down. The battleground, the market was able to close under the 100-day average. That puts the 18-day average as a possibility. Even if the market were to rally here with the break that we have, you'd have to get a big rally back over this 110.30, I think it's 109.35 to turn the trend back up. Right now the market's on the defensive. In the cocoa market, you went right to the Bollinger top and you stopped again. I'm going to say it one more time. After hitting the 18-day average, if you hit that number, it's where I think pros take some money off the table. You haven't had a trend market. You've had these vertical declines, then vertical rallies. Very hard to trade that. In the cotton, you're back into a downtrend. Lower highs, lower lows. Admittedly, you are oversold, and the market is fighting a battle right here at the lower Bollinger Band. My guess is the trade wants to see tomorrow's reports, and then it'll start reacting. In the cattle, you had an outside day down on Friday. When you take out the high of an outside day down within the next trading session or the session after that, then I call that a bear trap, and it often sets up price in the 18-day average coming together, and I think that's just where we're at right now. It's market's doing that. You had an update today where you stopped at the 18-day average in the feeder cattle, and you can see an outside day up in the hogs, probably in part because that doesn't mean tariffs are on pork. We know that Mexico wasn't going to put that many tariffs, I think, on pork or on the corn market had the tariffs all gone through. So let's talk about where we're at. What we're doing right now is we're prepping you, especially in these meats and the grain markets. Tonight we'll be doing it for the WASDE report tomorrow, then giving you trade ideas as to where we're at. We have really mixed opinions in the office as to how the opening tonight's going to go. I'm of the opinion that the corn's going to open lower. We bet lunch on it. Other people think it's going to open higher. And of course, you got to worry about new crop versus old crop. But that's how we are here. You know, we fight things out. But the interesting part is we write with a lot of experience. We have people that have been in this game. I'm in it 5 decades. I've got brokers with me 30 years in the game. And people right here, and the research that Linn puts out, I think top grade. So if you're a commodity trader and you haven't seen what we do, we want to put it in your hands. How do we do it? We'll give you a free trial. No obligation, no credit card, none of that. Simply give us a call to start your free trial, or you can go to www.iraepstein.com, and you'll see on our website a carousel of free offers. Click on it, sign up for what you want. We'll put it in your hands. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.